Okay guys, it's Monday the 5th of March. It's been triggered into a long position on the FTSE 100 after this pin bar. A little bit of a strange one, this one. So the market is already tested at my management point, which is this blue line. So I'm now just going to consider the position to be at the break-even level. If it comes back down and tests at the entry, I will just come out of the trade. I'm actually going to move up my physical stop. Just set it so if the market comes down, it just automatically takes me out. So as always, first trade of the week, it is not long after the open. A little bit of a strange one, this one, in that when it was setting up, I didn't think it was a position. So the signal candle, basically I use an indicator which just it highlights them for me, makes it a little bit easier. But with this one, it didn't really look like a signal candle, you know, just doing the visual check of the entry candle. So I actually doubted it and I had to do the calculations manually. So the market's just testing at this little pin down right here. We may see a little bit of rejection. It may just pop down and take me out at the break-even level. The physical stop is set anyway. But yeah, so with that entry candle, I doubted it. I had to do the calculations. I nearly missed the position because of that. I couldn't set an order. I had to do a manual entry, so I got a little bit worse of an entry than I would have liked. I just wasn't confident with the candle. It's the first time I've checked a candle in, I don't even know, months and months at least. Just because I slightly doubted it, I wanted to do double check. Okay, so we're coming back down. We are toward the entry point. I'm looking for the market to really press up into the zone up above. I'm not going to come out before the market reaches there, so I'm going to be in until the break-even level, or if we start to test at that zone up above. Let's see how we get on with this entry. Okay, so the market just about took me out there at the break-even level. I was actually getting ready to close it out manually, just because we've had quite big movements. If it comes back down and tests at that level, and you see a pretty strong press through, you can suffer a little bit of slippage. You know, it's really minor slippage. You tend to get, you know, an extra 0.2, 0.3 of a loss rather than out at break-even. But for me personally, just psychologically, when looking at results, I prefer to see either break even or it coming out just above break even. So when you're looking through your results, it's green rather than red. It's just purely psychological. And I find that if I look at results and there's lots of very, very small losses, it gets to you a little bit more than if there are lots and lots of very, very small wins. Just personal. As I mentioned, as a trader, you're going to find well, first of all, you're going to find out so much about yourself that you're not even going to believe it. You know, I would say trading is better than sitting down with any psychologist for learning about yourself. You're going to do things you never thought you would do. You're going to have a plan. You're going to drum that plan into your head. And then when it comes to executing the plan, you're going to start doing things or varying from the plan when you don't really want to. And you're also going to find out things that suit you more in the way that you trade. And for me personally, that's one of them. With break-even trades, I like to have very small wins rather than very small losses. So we're just testing up at this resistance level. We may not break through this area, but because it is such a big stop on this position, well, when we got in, it's now break-even, but when we got into this position, the stop was 18 points. So really, the absolute bare minimum I would go for would be 0.5 to 1 risk to reward, which we're just starting to break up above now. But really, I'm looking for a minimum of 13 points, and hopefully this market comes up and tests at the sort of MA200 level. It might not. We may just start to see rejection up here. If we do start to see strong rejection up here, well, it really depends what the candles do. I'd probably wait for each of the 5-minute candles to close before making any sort of decision. But at present, I'm waiting to see if we're going to press up toward the MA200 level now. We're just starting to break up above these swings 1, 2, and 3. So there is the potential that we'll see another little rush of buyers stepping into the market. Really minimum would be 13 points. If I can get up toward the 18 points, that would be great. Okay, so I have now come out of that trade. We are actually pressing up a little bit more. It may still reach that MA200, but when the market paused at this level right here, so we had a fairly strong level of potential resistance right here, basically the 6:10 a.m. swing point, and also up above at this level of potential resistance and this level up here. The market pressed up, it closed into those levels. I looked at that as being potential resistance, and then when this candle here at 8:20 started to put in a bit of a doji candle, I was just happy to get out of the trade. So a little bit of a strange one that this morning. This here, I wasn't even really looking at it as a signal candle. I got in with a manual entry rather than setting the order, which meant I got in a little bit higher than I would have liked. It just didn't, when it was setting up with the rejection that was coming into the candle at the top, I just didn't expect it to be a signal candle, if I'm being completely honest, but it was sitting at a nice level. Really with the management point going to be up toward this level and this level right here, creating a little bit of a management point zone. And the market is pressed up. Didn't quite get to the 1-to-1 risk to reward level. Let's have a look. How do I do this again? Gain today. So £358.80. Really, in all honesty, with the trade, I would have liked a little bit more. I exited as it started to come down on this candle right here. It was a doji, just started to turn a little bit red, just came out of the trade. Decided to lock in the profit rather than holding on to it and potentially seeing the strong move back down. Basically because we've got a swing, 1, 2, 3, 4, 5, 6 tests here. So if the market is going to continue with its bearish sentiment, it's a good level to be watching for that to come into the FTSE. If it's a good level to be watching for it to come into the FTSE, I don't want to hold on to a position for the sake of an extra 3 or 4 points when it's at a fairly sensible take profits level. Okay guys, so that's pretty much everything for, in fact, what I will do is I'll go on to the daily time frame and I'll just talk you through what I was looking at coming into today with this zone right here for potential buys. Really, when I was coming into today, I wanted to be a little bit cautious purely because the FTSE had such a strong move down recently. But what I'm going to do is I'll go on to the daily time frame and I'll talk you through what I was looking at. Okay, so we're now on the daily time frame of the FTSE. So this is the level pretty much where I was looking for that potential bullish bounce. The identification of the level, relatively simple. We're just looking left and we can see the close and the open of this 5th and 6th of February candle right here. So although the market came down and broke below this level once, twice and 3 times, after this very strong bearish move, this was pretty much across indexes. The US market's absolutely collapsed also. Around about 800, 900 points on the FTSE, we came down. Although we had that very strong bearish movement, the market is closing and opening, so it's holding at these levels, and then we get a nice strong bullish bounce. We come back down. On Friday, we tested at this level again, here, and then we bounced another 70 points. Now, this one here, so we're looking for this on Friday as well. However, on Friday, I wasn't really able to capitalize on the bullish bounce. I was looking for a relatively strong bounce from these levels, or the potential strong bounce from these levels. However, I was only able to get into very, very small trades just because they weren't lining up properly. And that's all part of trading also. You can't, sometimes you're going to have analysis, but it's just not going to line up properly. And you're just not going to be able to take or hold on to the trades, or you're not going to be able to get into the entries, etc. But coming into today, we came down, we bounced, we broke up above. So here we go. So the screen is now cleared of all the markings, but it's the exact same thing we're looking at. Market comes down, we get the test of these levels right here. You see the spike down at 8, and then at 8:05 we found stronger support. Quite a bit of rejection on the candle. As I mentioned, I wasn't really looking at that as a potential signal candle when it's set up, but then we got the signal, it came back up, tested at these levels, started to see a little bit of rejection, and it's put in the bounce. You can actually see it's starting to come up toward that MA200 now, which was the initial target until we started to see the rejection. Certainly this one here, with this amount of rejection, it's very likely if I'd still been in the position, I would have just came out as it started to spike down and taken a smaller profit target. So I'm pretty happy with where I got out. It's just the way I trade. Once I get to sort of 0.7 to 1 risk to reward, I'm always a little bit more cautious. I only want to hold on to the positions that I consider higher probability, or the ones that just rocket straight through that profit target. And that one didn't do it. Started to see the rejection. There we go. It's hitting up at ME200 now. Started to see the rejection, so I just came out of the trade. Okay, guys, so that's everything for today. As always, I hope that was helpful. I hope you're all having a good trading week. I'm James Orr, and thank you.